Hey guys, Kill Stokes here. Welcome back to another Trading Edge video, your weekly weekend look around the markets. Today but before we hop in, I have a question for you. What the hell happened to the markets last week? I was here Monday, everything was fine. I took a personal day Tuesday and Wednesday, and I come back Thursday, and things were a mess. You see what happens when I leave you guys alone? Well, this week we may see just as much action as we've got a handful of high impact news events on the radar. I won't go through all of them. You can go to your local, whatever news calendar to check them out. But on Wednesday, we have a monetary policy and interest rate decision here in the US. There's no expected change. That's going to be for September, but the market is looking for deliberate clues that September is happening. Thursday, we have a Bank of England monetary policy decision where something is expected to happen. There should be a rate cut, and we'll talk about how that affects the market in a little bit. And then Friday, this little news event called the non-farm payroll that seems to happen like once every while, maybe every first Friday of the month, which doesn't have as much of an impact as it used to in the markets, but it's something that as traders we're supposed to get excited about it. So yeah, non-farms, let's go. Seriously, do not try to trade the non-farms. Don't get cute. I lost a lot of money doing that. I got a funny story, but this isn't the time or place to tell it. Maybe I'll tell it at the very end. I'll do that. I'll tell my non-farm story at the very end since it's embarrassing and you may cut the video off after hearing about it. Let's hop in. So let's get started with the pound Aussie. Now, this is not a grade A trading opportunity, but because of what's happening with the monetary policy decision this week, if you're a trader that's looking to get involved in a certain direction, maybe you have a certain fundamental bias, well, this technical setup is going to help you out or could potentially help you out. But let's start with our normal process, IPDE. If you guys are new to the channel, that's a 4-step process that we use every single time we look at the markets to stay consistent in our analysis, because consistent analysis plus consistent execution equals consistent results, right? Slow, boring, consistent profit. Sorry, this isn't one of those flashy channels where I'm going to wow you. I saw this YouTube thumbnail the other day that said this trader made 10 million in his first month or first year. And I'm like, kill me now. Anyway, what we're doing here is we're currently trading, or we have recently tested a previous level of structure. You can see my orange line up here at where price is trading at. Look to the left, structure leaves clues. Now, this is going to be considered a minor level of structure, mainly because we have an overlapping level on top of it. This is going to be the more important level of structure. So we'll call this the less important level. The higher one is the more important level. And you can see that we tested that level and we got rejected. As we go down to the 4-hour, we're going to get a clearer picture of that rejection, right? We got more candlesticks, a very nice 2 rejections set up here, followed by a lower low, lower close. And we started our retracement. This is setting up for what's called a potential double top, right? A double top is when the market rises up. We reach, ideally, structure. We reach a price point. We start to get a little bit of relief here. And then we do one more test and we hold this level. This is the most important point. We need to hold this level, and this offers the opportunities for sells and a chance to ride it back down. Now, the question is, if you're gonna ride it down, where are we gonna ride it down to? And this is where, or I guess another reason why this isn't a grade A setup. This second orange line I have in, right, this represents the previous level of inside structure that we violated right in here. And this would be the next level that I project price action to go to. Going back down to the 4-hour and bouncing you all around here, right, for educational purposes, you can see that we technically did not hit that level. This cute little level of structure hidden in there too. Oh, you're so cute. However, we did come to the closest even-handled number, an even-handled number in this 196.00. We call those psychological numbers because just like, human beings, we like round numbers. We like numbers that end in zeros. We like 5 zeros. We like 25s, things that are easily multiplied and divided, stuff like that. So you can easily make the case for the move being made. Now, why do I say this is an interesting opportunity? Well, we talked about the Bank of England rate cut that's happening this week. Now, I don't think there's going to be any movement based off the rate cut because we know it's happening. That is old news. But if they were to come out and say something that maybe kind of hinted at more rate cuts coming or future rate cuts coming at a faster rate, we could see a decline in the pound, and that would be a short opportunity for you. So depending on how you feel on the fundamental side, I think it's certainly worth watching this, especially if you get some early week movement back up to retest those highs, perhaps a little bit of baiting to get people to buy the pound so that smart people can sell it later. But keep an eye on this, because we can certainly see an extended move down all the way to this level, which is my second target level down here at about, what is this, 193.60s, 194 even. So keep an eye on this. Next up is going to be the Euro Aussie. Now, I like this situation a lot better, and there's a few reasons why. One, we have come to a nice rejection level here, and we did get rejected, or we're showing signs of rejection again. And I want you to keep in mind this, right? We talk about kind of traders being late to the party, right? My investing mentor always told me this: by the time you hear about everyone buying, it's time to sell. By the time you hear about everyone selling, it's time to buy. Do the opposite, right? And you look at this and what has happened recently here on the Euro Aussie, and I won't count the days, but we've pretty much gone in a straight line all the way from down here at about 160 all the way up to about 166.5. That's a massive move. We are due for some relief, in my opinion. Now, we have the same issue as the pound Aussie, where we have some overlapping levels of structure, which can be, a little troublesome. But overall, look for shorts in this area, very similar to the pound Aussie. Now, what makes this different is we actually have you can have the double top here as well, but if we go down to the hourly, we actually have another setting up as well, right? We have a potential Cypher pattern. I'm going to draw this out real quick, but this is one of our advanced pattern formations. X to A, swing high to swing low being our first move, A to B being our second move, B to C being our third move. And if we can come up to this level right, 786, close enough, right up here, that would give us a bearish Cypher completion. So this is one of those situations where we have a bearish Cypher pattern. If price were to fulfill that bearish Cypher pattern, it would come to the same level that we would look for a bearish double top, right? Is there a bullish double top? I guess it's only a bearish double top. I don't know, right? Anyway, we have all these things lining up in the same direction. You can use this Cypher one of three ways, right? One, you can trade it just as a Cypher, traditional targets. 1, 2, get out, or however you do it. 2, you can use it half Cypher, half trend continuation trade, or not trend continuation trade, but half bigger picture trade, meaning you take first targets off at normal Cypher targets and you hold your second targets for your bigger structure-based trade, which will take you most likely down to this level, right down here. Or 3, the Cypher is simply an entry technique into the bigger shorting idea that you wanted. So a few different ways you can handle it. By the way, I've got a cool advanced pattern formation to look at later, and it's going to be kind of the opposite of how you would normally look at it, if that makes sense. It will later when you watch the video, all right? So let's move on to our next pair. Next up is going to be the Euro Canada. Let's hop out to the daily chart and see what's going on. Once again, look left. Structure leaves clues, IPDE, identify, predict, decide, execute. I can identify that we are at a previous level of structure. See these nice little legs, these structure rejections up here, and therefore I do not want to buy at structure, right? I do not want to jump when my head is close to the ceiling. Ouch, I shouldn't have done that. It hurt more than tender-headed. Anyway, you get the point. It hurt that much just hitting my hand. Imagine if you did it with an actual ceiling, it would not feel great. So when price is at these particular areas, I'm only looking for shorts. Now, I showed you with the 2 previous opportunities different ways to look for shorts. This is going to be a third way that we can look for shorting opportunities. And this comes off of another classic or pattern formation. This is called a rising channel. This is a deceleration pattern, right? So we see price action making a very sharp move from swing lows to swing highs. And then we can see prices still pushing up. So we're still moving bullishly. Yeah, we're doing that. But you can see that price is doing so with less conviction, right? Where before we had pretty much a straight line up, now we're kind of zigging and zagging, right? It's a difference between like us being really excited about doing something and we're running and doing it right away versus like a chore, right? When you don't want to do something, you're just dragging your feet, you're like, I guess I'll do it, right? And typically after these formations, we start to see a little bit of relief, which means a little bit of a pullback. And again, you add that classic pattern formation and what it means to the fact that we are at a key level of structure, an area where less buyers would be interested, more sellers would be interested, buyers would be interested in selling. You saw the whole thing we did a couple weeks ago here on the video with the bulls and the bears and thinking like the other trader. And boom, this offers a cool opportunity or a cool area for short. So keep an eye on Euro Canada as we start up the week and kind of tread water in this area right along a psychological number, 150, boom, and keep an eye out for shorts here. Now, staying on that theme, I want to take you over to oil, who had a very similar pattern and may be getting ready to, I don't want to say invalidate it because it already happened, but maybe starting to follow through. Now, from a bigger fundamental perspective, oil is in an interesting place. We've got weaker global demand for oil, with specifically China and a weaker GDP number, and their economy is doing weaker and less demand for oil. But we're also fine here in the US because it's the summer season. Everyone's traveling, but the summer is going to end soon, so less traveling, and we expect demand for oil to decrease. So there's all types of fundamental jazz happening here with oil. But from a technical perspective, we have had the same type of falling channel, right? And then we saw the relief off of that. That was that move from right here, wrong tool. Let me rewind, right here to right there. And again, with these, rising channels, falling channels, when I say relief, we're not expecting a full reversal. We're not expecting the trend to kind of flip upside down and go in the opposite direction. We're just looking for a little relief. This is pure kind of counter trend trader type of trading, right? Trading, counter, words. Anyway, so we saw that relief, and now price is storming right back down. So this pattern is done. It's done its job. It's over, right? The question you would ask yourself is, if the bulls were going to be in charge, we should have saw a continuation. The fact that we only made it to not even the top of the pattern before getting rejected back down shows us that there is still strength on the sell side. Now, this isn't enough for me to be interested in this. What I need, because I'm a technical trader and I have rules that I need to follow, I need a break and close below the low of this pattern, this lowest level of structure. So if we get a break and close below that beautiful yellow line that I just drew in, then we're expected, or I would expect the market to continue lower. And we can hop up to a daily, which I do first, but from a learning and educational perspective, I started on the 4 hour. On a daily, sorry, camera's in the way, I can't see my own chart. Here we go. Give you a chance to see the shirt. How you like it? Yes. And the question is, okay, from a daily perspective, where are we likely to head to next? Well, two levels, right? A minor level would be right at the low here. So right in this level, this little pregnant pause before the last elephant candle. We call these big candles elephant candles. And then after that would be the lows down here around $73. So keep an eye on those two levels for oil, but remember, we need to break that level or violate that level first. If we don't do that, then there is no signal. From oil to silver, some more commodity action for you guys. Here's what we got going on. We got a few things, right? One, we have a potential advanced pattern formation setting up here, right? This is going to be our X to A swing low to swing high, or A to B right here. You can see that we don't quite touch the 618, and that's very important because if we touched the 618, we'd be on alert for a completely different pattern from if we didn't touch the 618. Now, some of you guys are saying, well, Keel, it came very, 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 very close to touching the 618, but it did not touch it. And this is why we have rules to keep things as unsubjective as possible. Unsubjective. I'm having a way with words today. But one of the issues with having subjectivity in your trading and discretionary trading in general is that you can come up with things where it's like, well, it was close enough. But then what does close enough actually mean? This is why we adapt the rules-based trading philosophy, where you need to have rules. Now, there are some things that won't be able to have rules, like measuring ebbs and flows, or maybe even measuring pullbacks, right? You can create rules for them, but they may not line up with what you want. And that's a whole thing we deal with the clients on our platform. But as far as patterns go, right, we have very specific rules, right? There is no close enough. It either hit the 618 or it did not. And if it touches the 618, it's one thing. If it did not, then it's another thing. Now, if you are working under the premise with these patterns of like a buffer zone, because there's different data providers and nothing's perfect in the market, you can still have close enough and make it rules based. Just define what close enough means. Does close enough mean a certain percentage away, a certain pip or tick amount away, right? Define that, and now it's rules based. But because we do not hit the 618, this is going to be a potential bat pattern. With a bat pattern, we're expecting price action to travel to this 886. And let's kind of keep this in mind for later, because that's not actually what I wanted to show you, but I got on the daily and I saw something that cool. And I'm like, okay, let's add this to the video. What I wanted to show you was this, another one of my favorite patterns. So price action has dove down here on silver, and we've pretty much consolidated. Now I'm gonna draw the lines out like this because I believe in horizontal support and resistance, but if you're a trendy line person, you can kind of slant them as well. But fact of the matter is we had a bearish move, and now we are stuck consolidating. Now, this is one of my favorite setups because all I have to do is wait, right? If you've been hanging around the channel for a long time, you've heard me say a brilliant term, which is we wanna be predictive in our analysis, reactive in our execution, meaning that we want to predict what might happen if the market does this, what may happen if the market does that, but we do not take the trade until the market gives us some type of proof. Now, proof doesn't mean it will do it. If you trade it, you can have the greatest setup in the world and it can still skunk you out. So it doesn't mean you're going to win 100% of the time, but it means that the probability of you winning is more than it was before. Right? And that's just kind of, it's more of a conservative approach. So if you're super aggressive, you don't want to do that, or you can do it in different ways. But that is what I mean when I say predictive in our analysis, reactive in our execution. So in a situation like this, I'm going to erase this blue line because again, I use horizontal support and resistance. I see us consolidating. Now, I don't know which way we're going to go. I don't know if the market's going to go up or down. The market is sitting here having a think, right? What I do know is this. I do know if we go up, we are likely to head to this level right here. And if we go down, we are likely to head to that level down there. So what I do is I just sit back, hands above the head, and I wait for the market to give me a clue, right? And a clue would be a violation one way or the other. If we break and close to the upside, I think we're going up. If we break and close to the downside, I think we're going down, and I look to get involved in the trade accordingly. So silver's in a cool situation because we can sit and wait for the market to tell us what it wants to do. And then once it does what we thought it wanted to do, we do what we're supposed to do. You get it? I don't. So next up is the Dixie, the dollar index. You can see my notes are still on my chart from Thursday's live room session. And this is going to be a different type of classic pattern formation. It's going to be called a head and shoulders. As illustrated, we have a left shoulder, we have a head, we have a right shoulder. And the key component of this is the neckline, or this horizontal level of resistance. We have an area, predictive area. This is what I do when I record these Friday evenings after long days. We have a predictive area in which we initially identified our kill zone, taking the low here and the high here. And then we did some cool little technical analysis, the stuff that I show you each and every week on this video. And we pinpointed a level right here at 105 that we would like to shoot for targets. So same thing as silver. We need a break and close above this yellow line. If we get a break and close above that line, then we can predict a move up. Until then, this head and shoulders pattern is not complete. And because it's not complete, I think it's very dangerous to try to buy in advance. Now we're gonna look at the Dow. Wow, cow, plow, any other words that rhyme with that. I'm getting tired, long video. But this is going to be one where we have a cool pattern formation, my favorite pattern formation from a psychological perspective. And I'm going to explain why it helps with potentially the next opportunity. So first and foremost, do I want to? That's gonna ruin it. Let's go down to the hourly first. So what we've had here on the hourly is called a butterfly pattern, right? I showed you bats, we talked about Gartley, we talked about ciphers. Something that all those patterns have in common is that they complete within the X leg, right? So if we have a cipher here below, you can see that the D completion is below the X leg. If we have a Gartley pattern here above, you can see that the D completion is below the X leg. So we have this kind of built-in level of structure that keeps us protected. Do we have anything that represents protection? A robotic muscle, yeah, protection, from stop losses, right? Because our stop loss is above that level. The butterfly pattern is a little bit different because we don't have that protection, right? How the butterfly pattern completes is that we have an X to A, an A to B, a deep B retracement, a B to C, and a D completion that completes above our X leg right here. Now, I won't get into the details of the butterfly pattern because there are lots of variations. The one that I particularly prefer is using a Fibonacci extension from the A leg back to the X leg and looking for the 127 Fibonacci extension. Boom! Right on it. Swish! Right? But what I love about the butterfly is this. The psychological reason behind it. I'm going to walk you through. This is that weird thing I talk about where I like to, for me personally, and how I learn, I like to create stories, and stories allow me to understand things better. And when I understand things better, I see them differently and from a different perspective, and it allows me to make more money, right? It all comes down to Akil making more money, right? So what we have is the X leg, right? Which is our level of structure, right? We know how support and resistance act. The fact that we were able to break out of this structure tells us that the bulls are in charge and the bears were defeated. So the bulls that are buying it up from down here, right? And then some more come in right here, and I'm sure a little bit more coming right here. They get to a point where they break out. Now, many of these bulls have been on a run for a while, right? They bought right here. They bought right here. They've extended it all the way up. It is time for them to make some money by cashing out. And then you see a little bit more relief in the market because of that, right? Now, this move isn't necessarily done because we violated a key level of structure. There's still another flock of bulls that existed right here that are still in the trade. And then there's new bulls that were like, oh man, I wish I could have bought it there, but it was too expensive. But if this thing gets cheaper, I'm in, right? So they're looking for that opportunity to buy. And from a butterfly perspective, the most efficient way to take targets for a butterfly trader is obviously sell here, or maybe not obviously, but sell here at the D completion to 127 and look for targets back at the X leg. It's not a great risk reward way to do it, but as far as tracking where the move is likely to go, that is the best way you can do it. Anyway, this ends up being all that jargon just to tell you this. We have a break above, close above, and then we have a pullback trade, right? Just a quick side note, we were having this conversation in the live room the other day, and I have a course, right? We have many courses on the website. One of the courses I teach is called the Foundation 2 course. And the whole point of the Foundation 2 course was to look at the market from this weird perspective of reading it like a story, from an individual candle to candle combinations to an entire price chart. And because I oversimplify things, I wanted to make it very, very clear that there are only 3 ways to trade. And as a trader, if we can understand those 3 ways to trade, it makes the rest of it so much easier. Because sometimes we get so overwhelmed with information. There's a million things out there, and some of you right now are like butterfly and wings and crazy, right? But at the end of the day, just remember that there are 3 ways to trade. There are counter trades, right? It's like the few I showed you earlier where we got to support and we got rejected, so rejection type of trades. There are breakout trades where kind of like this, where we broke out from a level and then boom, we exploded up. And then there are pullback trades where after the breakout, we come back to a previous level of structure ideally, and then we move up. So this is no different than a pullback trade where we had our breakout, you're waiting for a little bit of relief, which we got right here, and then you're looking to extend up in a classic trend continuation type of trade. Now, we go back out to the daily, which again, we looked at first, and we see that price action kind of came down in this complex pullback type of move like this, and then we ended the week with a break above, close above. So right away, that break above, close above gives us signs that we should predict price to go higher. And then we fill in the blanks with what we saw on the 4-hour time frame or even the 1-hour time frame with the butterfly, where we have this break of structure and we're looking for a move up. So a cool situation there. And again, for you guys that aren't butterfly traders, this is how you can still use the butterfly, or at least kind of the psychology behind the butterfly, to set up your next opportunity. Knowing that this is a butterfly pattern, knowing that we're likely to see relief at this area, knowing where many of those butterfly pattern traders are looking to take profits at. Again, the most recent level, sorry, pause there, I can't type and do two things at once, right here, and then kind of the extreme of that level being right there. That sets you up for a nice zone where you're saying, okay, well, if I get a reversal signal in here, this is where I'm looking to pounce. Now, before we bounce, I got that story that I promised you in the beginning. Before I tell you, do me a favor, hit that subscribe button if you are new. Subscribe to the channel. Lots of content each and every week. We got the Trading Edge videos. We got the Trading Coach podcast that come out 3 times a week. Some really cool ideas are coming up. I'm glad you guys enjoyed the airplane theory. That was a fun one. Now, I told you this week we have non-farms coming out, right? Which is historically the most kind of like rah news event in the market. And back when I was a very young trader, a newer trader, right? I had a full head of hair, the beard wasn't in. You guys have seen the old videos, right? I'm like a baby, no bass in my voice. The market hasn't kind of ruined my soul. I was still happy and had hope for everything in this world. I got lucky on a non-farms, right? I was trying everything. It just happened to be the thing at the time that I tried, because the internet was like, oh, this big thing's coming out, you can make money. I was like, okay, word, right? So what I did was, right, a non-farms is coming out first Friday, right? We know the time. And what I did was I did a little research. I said, hey, the whatever Forex Factory predicted the number to be better. So I said, okay, well, I will buy. It's predicting that a number is going to be better. That should mean positivity for the currency. I'll hit that buy button. And man, the market shot up hundreds of pips in a few seconds, and your boy made lots of money, right? So of course, right, thinking that I was a genius and I outsmarted the market, I threw away my plan of making 20 pips a day. That was my previous plan. I tossed that aside. I don't know why I did that, but I tossed that aside and said, you know what I'm going to do? I'm going to be the 1 day a month trader. I'm going to travel the world. I'm going to see the sites. I'm going to do this. I'm going to do that. And I'm going to make sure I come back every first Friday, and I'm just going to hit on the non-farms. And then I'll do whatever I want and enjoy my profits for the rest of the month, right? Silly trading, but I was dead serious. I thought this was, because it happened once, I thought this was the way out. Long story short, I tried it for like the next 3 months, and I consistently lost every single time before throwing, it's pitiful, throwing that idea out the water. So trust me when I say, do not try to trade the non-farms. It is a crapshoot. Remember, it's not the number that matters. It is the reaction to the number that matters. If you're a fundamental expert, maybe, and that's your thing, but if you're a trader just looking for a shortcut, do not try to anticipate the non-farms and position yourself beforehand. Do not try to trade during the non-farms. You'll get whipsawed to death. Just stay away. Set your alarm 15, 30 minutes before and say, do not enter market. Set your alarm 15 to 30 minutes after and say, do not enter the market. Literally tie your hands and fingers together if you need to do that, but do not attempt to trade it. What you want to do is you want to save your hard-earned trading income for your high probability setups and not your reckless gambles. Trust me on that. See ya.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.